Welcome to Biz 417's SBA Disaster Loan Assistance webinar presented by Guaranty Bank. I'm Logan Aguirre, President and Associate Publisher at Biz 417. As small businesses continue to navigate the impact of COVID-19, the number of financial relief options has become kind of overwhelming. After our first webinar on the Payroll Protection Program, you told us you'd be interested in attending a follow-up webinar on all the financial relief options and resources through the Small Business Administration. Today, we owe a huge thank you to Guaranty Bank for jumping on board so quickly to share their SBA lending expertise. With us today, we have Micah Scott, Senior Vice President and Small Business Banking Manager at Guaranty Bank, and Scott Tennison, Vice President and Small Business Banking Officer at Guaranty Bank. Micah Scott joined Guaranty Bank in 2008 after previously working for the Federal Reserve Bank of Kansas City. He specializes in finding the best lending solution for customers utilizing the SBA Preferred Lender Program along with conventional financing options. Scott Tennison joined Guaranty Bank's commercial lending team in 2015. Previously, he was the Senior SBA Lender and Vice President at Liberty Bank. Scott attends annual SBA trainings to ensure Guaranty Bank remains well informed and up to date regarding changes that the SBA may be introducing. So we're in good hands today. Micah and Scott, can you guys tell us a little bit about your expertise and knowledge surrounding the CARES Act and SBA lending?
I would say that, we're all kind of thrown into this, but, just following all the current changes that are so rapidly coming with the CARES Act is the most important thing to make sure that our customers are getting the best information they can and know the product.
Yeah, I would just add that, I think there's a lot of information being thrown out there. A lot of it is credible, not all of it is, but it's changing every day. Friday, the SBA put out a new application for the Paycheck Protection Program. And so that was kind of a curveball for us, and it is for borrowers as well. But just staying up to date, like Scott said, is important, and being in touch with your bank to make sure that you are on top of it is important. Communication is always important, probably more so now as things change. But just making sure that you're staying up to date with credible information from SBA or the Treasury is important as opposed to everything else you may read online.
Yeah, that's good advice. So we're going to do our best to answer all the questions we can today. We're mainly going to be spending our time talking about the Payment Protection Program and the EIDL loans. If you do have questions that we haven't covered, please make sure you're putting them in the chat box to all attendees, and we'll see those pop up, and we'll be able to get to those as we move through the program. So can you guys give us an overview real quick, as quickly as possible, I guess, of PPP and EIDL and sort of the similarities, differences when you are recommending them for different employers, which ones you're recommending and why?
The difference is obviously the EIDL program is a direct loan with SBA. It is a longer term loan at a low fixed rate, no payments for the first 12 months. That's no interest accruing, no principal and interest payments. So for those borrowers that are not for sure the amount they need, and if they need that, and it could be paid back in 12 months, that might be the best option for them. Whereas the PPP loan is strictly geared around wages at 2.5 times. So we want to make sure that, that one is more specific to the proceeds and what the loan amount is geared to. Whereas the EIDL loan is maybe a little more liberal as far as all expenses across the board and what that customer's needing.
Yeah, I think it really depends on each business and the kind of the structure, depending on how much they have in payroll versus how much they may have in other costs. So some businesses are, if you're a service business, you are very heavily, your biggest expense is probably going to be payroll. And so for them, that may be a great program to where you can take the money, keep your employees on when you otherwise may have had to lay them off, and you can use that to keep them employed as opposed to having to lay them off and then have to file for unemployment. If you are a distribution company or maybe manufacturing or others, the EIDL may be more suited for you because you can generally borrow more money. Under EIDL, the cap is lower. On EIDL loans, you can only borrow $2 million, and on PPP loans, it's $10 million. However, $10 million on a PPP loan would be a very significant amount of money, since that's basically 2.5 months of payroll. So you're talking about a pretty sizable company to get to that size. But for a lot of companies, for a lot of small businesses, $2 million on a disaster loan would go a very long way to getting them past this, whatever cash flow issues they're having in the short term. And so generally on the disaster loans, you can borrow about 6 months of your gross profit or half of your gross profit for the past year. So again, depending on the nature of your business and your income statement, you may be able to borrow more money on the EIDL loan. And like I said, and like Scott said, it can be used for a variety of purposes, really any purposes from payroll to paying vendors and just general working capital to help keep the lights on and pay rent and other things.
And so with the EIDL loans, that's directly through the SBA, but
Yes.
the PPP loans is through a local lender, you're the lender of your choice. So those applications started being accepted last Friday for small businesses. And I know you guys were flooded with those. So can you tell us how many have you've processed so far, how many you've approved, and the amount of money so far that you've seen approved through your bank?
As of this morning, we had approved 149 loans for roughly $21.5 million. Across the nation overall, with all lenders, there's 2,400 institutions that have participated in approving loans. That comprises of about 130,000 loans at $38 billion currently.
So that's a lot of money. There was this fear, I know, late last week that we were going to run out of money and we were going to run out really fast. So based on those numbers you just said, you still feel like it's not too late for people who are watching right now and haven't submitted their application yet. It's not too late, right?
Right. Absolutely not too late. I would tell them to, like Micah said, get with your lender and get your applications in.
So tell us a little bit about the process. Usually an SBA loan is pretty complicated and it requires a lot of extra information. So tell us what's different about this one.
So for anyone who has ever had an SBA loan or any lender who has ever done an SBA loan, this is essentially the exact opposite of everything that you ever thought a loan, especially an SBA loan, would be. And so I know some borrowers are having trouble maybe getting used to it, but more so we as bankers are as well, because we are taking no collateral, there are no personal guarantees, and we're loaning money at 1%. So for us, it's a little unique, but for borrowers, it's a big benefit because the Treasury or Congress through Treasury is really wanting to get money out to small businesses to ensure that payrolls stay as strong as they can. And so to do that, they understand that they knew there was going to be a huge demand for it. And so they tried to design the program to make it as simple as possible for both borrowers and banks so that they can apply quickly, we can get them approved quickly, and the money can get out to the businesses as quickly as possible. And so the application process, every bank has interprets it a little differently as far as the requirements, but generally speaking, you've got the SBA application and you have to provide some sort of payroll documentation because the loan amount, as I think most people know now, is 2.5 times your average monthly payroll over the past 12 months. And so we as lenders have to document and verify what your payroll actually is, including things like health insurance premiums paid by employers, retirement plan benefits paid by employers, and we have to be able to document that. We are not really underwriting the credit for repayment because it really is designed to be a grant for businesses if they use the money appropriately. I think it's important to note that it is still a loan. This is a loan. You are borrowing money and you will sign, in most cases, most banks will have borrowers sign a note. The intent is that all of that, or at least almost all of that, would be forgiven and treated more as a grant. So we're not really underwriting these for repayment like we do on a typical loan. And like I said, there's no collateral, there's no personal guarantees like on a traditional loan or a traditional SBA loan. So it's going to take some adjusting and getting used to. I think the borrowers will appreciate that it's simple, hopefully. And we as lenders appreciate it as well. If we're going to, Scott mentioned we've approved over 150 loans. So if we're going to process that many in a matter of a week or so, we have to simplify it from our standard processes. And I think we are doing that. And so I think we'll find that the money is getting out to the businesses as quickly as possible, and quicker than we've ever done it before, to get that many applications turned around.
So if someone needed to get the application, they could just reach out to their local lender and get it that way, right? Or going to the SBA site, either way.
Yeah, I think most local lenders are going to have that on their website, readily available for those customers. And then obviously the SBA's website, the Treasury website will all have those applications on there.
And I would just add real quick, the application itself, which is a 2-page document, is going to be on the SBA website, or you can Google it and find it. It's SBA Form 2483. It's very easy to find, but you need to contact whatever bank you're going to apply with and ask them what additional information they need, because the application itself is not enough. And as I mentioned earlier, every bank is slightly different on how they interpret and what documentation they want to see. So rather than just fill out the application and sending it to your lender, you really need to contact them and know what additional supporting documentation you need to send.
So for people who have already submitted and been approved, do you know a time frame of when they can expect to receive their funds?
You know, I think that's across the board. I mean, everybody's going to get it out as quickly as possible. I'm going to say within inside a week and a half, they ought to be able to get their funds if they've been approved. It's just really depending on the lender. I know we're going to try and get ours out just as quickly as possible, but I'm going to say anywhere from a week to a week and a half. Okay.
So then this Friday is when it opens for sole proprietors and I just blinked on the, is it
independent contractors?
Independent contractors. But they can go ahead and get their applications to you and have it ready in the queue, right?
Yeah, we've received some already. We've already reviewed some of those. As you mentioned, we just can't get them approved. SBA's system that we use, it's an online web-based system that we use to input our information and get our approval. It's not going to be available for those until Friday.
So for people who are, you know, applying and waiting and that kind of thing, is there any reason that someone would not be approved? Have any come through so far that you guys have had to deny? What would those reasonings be?
I can't say that we've had any that come through that would have to be denied. The applicant is certifying to a number of certifications on the application, the 2483. If they can't answer those correctly, if they can't answer those as the way they need to be answered, that would make them ineligible. There's certain, the way that the payroll is calculated could make a certain portion of it ineligible, and that's a very important thing, back to Micah's, on getting stuff to your banker. If you can give them a summary sheet of how you came up with your amount, that is going to be exponentially helpful to them as far as being able to put that in and knowing where you came up with your amount. You know, a lot of times we've seen it a lot where people are doing 1099 wages that were paid out. Those are technically not eligible for this, nor are federal taxes. So the payroll has to be net of those. So those are a few things we're seeing, but as far as just completely being ineligible, no, we've not seen that.
Sorry, my dog just came in. I'm afraid he's gonna like jump into the frame any minute. He's really cute, so if he does, it'll lighten the mood a little bit. Not that this isn't just...
Yeah, this is fun stuff.
So we have had some questions come in that I think might be helpful. One thing is, so you do a 2.5 times payroll, and the intent there is that the half that you're not using on payroll could be used for rent and utilities. Is that something that needs to be submitted up front, or is that something that's tracked at the end, and how does that all work?
Yeah, so the loan amount up front is based solely on that payroll, that 12 months of average payroll. And we can get a little more detail as far as how you calculate that if we need to, because there's been a lot of questions, like Scott mentioned, you know, 1099 payments to contractors and the employer's portion of payroll taxes that aren't included, and you know, any compensation of an employee over $100,000 per year, that excess is excluded. And so there's some technicalities in there we can get into, certainly, and people may have questions on that. And I just blanked where that was going with that.
Oh, so how do you, at the end, how do you show rent and utilities, what the other half was used for?
Okay, all right. My memory is not very good.
Okay.
So up front, we don't need that information. Like I said, the loan is based solely on payroll. And so it's 2.5 times that. at the end, and this is something that, you know, we are going to try to deal with our customers up front and just make sure they're aware of what they will need at the end of 8 weeks. Because again, the whole idea is that this is a forgivable loan. But in order to forgive it, we have to get certain documentation from them to prove that they used the money as they were supposed to, and they kept this same number of employees. And so there's the formula that goes into that to make sure, and you know, some companies may see 100% forgiveness, some may see 90, 75, we just don't know. It depends on their employee count and how much they're paying their employees relative to how many employees and what they paid them before, you know, before this crisis. And so at that point, we'll have to get payroll records and also rent, you know, cleared checks for rent payments and utility payments, et cetera, and mortgage interest if they have any. That all can be included in that forgiveness piece. So it's going to be really important, and we are working to put together a checklist to our customers to give them at closing to say, you know, you got the money, that's the first step, but you know, everyone wants this forgiven, or they probably wouldn't have applied. But and so in order to do so, you've got to keep good records. I know some borrowers have said they're going to open a separate account and put this money in solely so they can track it a little better. That's not a bad idea. It's not required. Definitely, we will not ask for bank records. We will just ask for likely, you know, 941 filings, state unemployment tax filings, and then, you know, like I said, the cleared checks. But that's important, very important. So 8 weeks from now, it's going to be, Scott mentioned, if we have good applications, we can process these much quicker. It'll be the same thing on the back end. The better documentation we have from customers showing where the money went and that it was done appropriately, they'll get their loan forgiven much quicker.
I think it's important.
Not forgiven. Sorry, I don't know if you had already said this, but you have 2 years to pay it back with this first 6 months deferred, right?
Yeah,
that's correct.
Okay, I'm sorry, Scott. What were you going to say?
I think it's important to note too on that piece that anything outside of payroll, whether that be rent, utilities, mortgage interest, or whatever you're going to use, that can only equate to 25% of the total loan amount to be able to be forgiven. 75% of that has to be for payroll.
Okay. So I'm just going to go through some. I'm not necessarily going to go in any certain order, just kind of as things have popped through here. Is PPP a good option even though FICA and FWH are excluded, or is EIDL a better option?
So that's going to depend on the business, you know, what works best. Yeah, as we said, payroll and payroll taxes and withholdings, you know, the withholdings, especially, you're really just withholding the employees' money if that's what they're alluding to. But you still get money for payroll, and it's, I don't want to say it's free payroll for 8 weeks, but it kind of is. So it can still be a great option. And I don't think we've touched on it. We may eventually, but you can have both a disaster loan and a PPP loan. They just have to be for different purposes. So depending on the nature of your business, as I said, if you're a service business, you're probably going to be almost exclusively payroll, rent, utilities. That may not be the best option for you. But if you are a, you know, maybe you're a restaurant, a manufacturer, distributor, whatever it may be, you may be able to use both and get your payroll covered over here and then borrow the money for payables and other things with a disaster loan. And I will say on the disaster loan, there is no forgivable component of it. It is just a, you know, it's a 30-year repayment. So it's low, it's very low payments. It is all, you do have to pay it all back, other than the $10,000 piece that I know has caught a lot of people's eyes that you can request up front. But the rest of the loan that you're going to borrow is completely repayable, but it's very generous terms of 3.75% fixed for 30 years. And my understanding is they are not taking, you know, anyone out there who's had an SBA loan in the past, if you have equity in a, you know, personal residence or other property, they take a second on it, and they typically do on the disaster loans as well. However, for this particular disaster, they have waived that requirement. So, you know, you don't tie up your residence, but it could be good for both. And PPP is a great option for many customers if they have employees and they would like to keep them on the payroll.
So, I mean, we have somebody here who's like a hair salon, and so they're shut down. They have no income coming in. So there's not even anyone to necessarily pay the payroll to. So in that case, is it better to go with an idle loan?
Yeah, I think that really depends upon, the salon, maybe they've got booth rental, they were just paying that. In that case, idle loan might be better. In so many cases that people are shutting down, because that's a question we're getting a lot is, hey, my employees aren't working, so how do I do this? Well, essentially what you're going to have to do is bring them back on, put them on the payroll, bring them in, make them do something, or they're going to sit at home and you pay them for doing that. But you have to be able to support that payment and bringing those employees back. It's all based off of employment numbers and everything else. But, if somebody's needing to pay those, in some cases, both loans are necessary. And maybe you do need this one for payroll over here. You just can't commingle funds between the two of them. And then over here, you use those for your normal expenses as far as rent and the other items that you may have over there. So in some instances, both loans are necessary.
So I know that most people are applying right now to use the funds in the next 8 weeks, but Micah, you had said there is an option that if for some reason you're okay for these 8 weeks, but you want to have access to the money because you have a really slow period coming up later in the summer, that you can use it at a different time frame here in the next few months. Can you talk a little bit about that?
Yeah, so most people are familiar with the 8 week, basically from the time you take out the loan, from the time you sign the note, you have 8 weeks to use that money for eligible forgivable costs. And so that time, that clock starts ticking when you close the loan. Just because you get approved for the loan right now doesn't mean you have to actually close and fund the loan right now. You can wait. And so where that would come in helpful for a lot of people is ideally, no one knows the time frame of when businesses are going to be able to open back up to the public and start generating more revenue and thus bringing back employees. But they're hopeful that maybe it'll happen by the 1st of May. And so the calculation I mentioned earlier, part of how much will be forgiven is based on how many employees you have during that 8-week period versus how many employees you had before this crisis. And so if you think you're going to get busier in May and especially June to where you can bring back more employees because you're going to have more revenue, you may actually want to wait, and close. Again, it has to all be out by June 30th. So you wouldn't want to close really after about May 1st. But you could close then and have that 8-week time frame starting 1st of May to have a higher employee count, because the more employees you have relative to how many you had at the beginning or before the crisis, the higher percentage of your loan you're going to have forgiven. So if you haven't laid anyone off at all yet and you're not planning to, then it doesn't matter. You can take it right now. But if you previously laid off some employees and you're planning to bring them back as part of this program, which is the design and intent for the program, you may, if you think your business is going to pick up, you may want to wait and take that out, a few weeks later. And you could probably, depending on, your situation, could have a higher percentage of the loan forgiven.
We have a question here about, says, will SBA's temporary forgiveness of 504 and 7A loan payments affect forgiveness of the PPP loans?
No, it will not. Those are really two separate programs. The payment waiver for 504 loans and current existing 7A loans was completely separate of the idle loan and separate of the PPP loan. So that was just something that was in the bill that was to help small businesses out in the interim.
And that's something that a lot of people may not be aware of, but if you have an existing, and you may already know it, if you have a 7A or 504 loan, if you have one, you would know, any payment after March 27th will be covered by the government for the next 6 months. It's not repayable. When we take on a 7A loan, we take your payment, it'll be applied just as though you made the payment. So we will go to principal and interest as it otherwise would. So it's a great feature that will help a lot of people. If you don't have an SBA loan, then sorry, it's not going to help you, but many people do. And so it's going to be a really big benefit for a lot of people.
So that's not getting added on at the end or distributed throughout the life of your loan. It's just
correct
being taken care of?
Yeah, it's, I don't want to say free money, but it kind of is. And so, like I said, they're going to make your payment as if you made it. And one thing we haven't talked about yet with a PPP loan, the part that's forgiven will not be taxable is the intent anyway. I haven't seen a lot on that other than the initial verbiage that came out. I think it was in the bill itself. But that is not taxable. So whatever you get forgiven, not only do you get that forgiven, but you're also not paying tax. Whereas typically, if you have a loan forgiven, you would get a 1099 or 1098 at the end of the year for that. On the payments to 7A and 504 loans, I've not heard yet if those will be taxable or not. But regardless, most businesses are going to have plenty of expenses to offset income for this year anyway. So I don't see that as being a big deal anyway.
Let's see. If a person filed for bankruptcy in the past, which included an SBA loan, would they still be eligible?
If they've defaulted on any SBA loan, that's a question that they have caused a loss to the government, they would not be eligible in this program.
Okay. This says, for sole proprietors and independent contractors, what is the basis for the loan if they aren't running a payroll? And what requirements for the application process will be needed when these are open on this Friday the 10th?
So,
go ahead, Micah.
No, I will gladly let you answer that one question.
This one's kind of open to interpretation. We're still trying to kind of figure this all out. Me and Micah had spoke about that today. Kind of what we're thinking right now is really taking the Schedule C, or what is provided by the borrower, and taking that net income, adding back depreciation and interest as we typically would, and then really going based off of that, because if they don't have payroll, that's really their payroll. If they do have a portion of payroll in there where they pay some people out, it's going to be a little bit easier. But for them, for that owner, that's really their payroll.
Okay.
Yeah. So someone looks at their Schedule C, and if you don't file a Schedule C, you may be trying to figure out what we're talking about. But if you do, you'll probably know. And I think it's taxable income. I forget what line it is on Schedule C, but that is, your income after expenses, or in other words, kind of like that's your take-home pay effectively. And so that's why we're trying to equate that to similar, to a salary or wage that someone else may earn if they were an employee.
Okay. Is Workshare program or STC covered by the Paycheck Protection Program to make it last longer?
I don't really know on that. I'll be honest with you. I don't know if Micah knows or not. We've ran into a couple of things as far as union dues and that kind of stuff. I don't know if that's similar to the Workshare program but if it's on there as a part of their payroll or a cost to the business as payroll, then we're counting that as eligible. Micah, I don't know if you have anything to add to that or not.
No, I've not seen that come up at all before. So typically what I've told people is if it is running through your payroll, then it's included. If you report it as wage, so if you're a business owner in this case, getting away from the Schedule C and the proprietors, if you're a business owner and that runs through your payroll and you're reporting on your 941s or your W-3s or whatever it may be, it would be included typically. And if it's not, then typically it would not be included.
So this question says, so you can use 100% of PPP for employee payroll and be forgiven. And it says, I know there's a cap of how much can be used for rent and utilities. So I think what I heard you guys say is 75% has to be used on payroll.
Yes.
Well, you can use all of it on payroll if you want.
It just 100%, but they're limiting the amount that you can use for rent and utilities and mortgage interest to 25%. So it can be 100% of payroll, or if it's split between the two, it has to be at least 75% payroll.
It says, will 7A loans closed in the future be eligible for the payment forgiving program?
Yes. So it is all, it's not open-ended, but it is all current and current SBA loans and those made through, is it September 30th, Scott?
I believe so.
Yeah. So, if we originate a new SBA loan that really is outside of PPP or EIDL, it's just a good old-fashioned 7A loan, it does apply to that for the first 6 payments as well.
Wow.
So, pretty generous terms, really, on a lot of things. So it's okay. Something that Congress has taken bold.
And then this person says, if they get Paycheck Protection and EIDL, they use Paycheck Protection for the first 8 weeks of payroll. Can I then use the EIDL loan for additional payroll after the first 8 weeks?
I would think so.
Yes.
Okay. Those are all the questions that have, I believe, come in so far. One more that was texted to me was, will the loan funds go directly to the business bank account?
That's the way we're planning on it. These are all to be, there will be, the way it's intended is it's all going out there. Don't be drawn. It's not supposed to be drawn out in pieces. It's all going to go out there. And really, when we're working with our existing customers, we'll be putting that probably in their banking account.
Okay.
And I'd say, we will process them for non-customers, and we've gotten several of those applications already. And so likely those will just be a check. Once we get a signed note back that we'll need in order to loan the money, we would just either mail or, give them a check.
Okay, we had a couple more come in. On Paycheck Protection Program, does the forgiveness period end on June 30th no matter when you close on the loan? Can you use the loan proceeds after June and it just not be forgivable?
Yes. Yeah. So if you want whatever you want to be eligible for forgiveness needs to be used within the 8-week period starting when the loan closes. So once you sign, whatever date is on your note that you signed to get the money through the PPP, you have 8 weeks to use that on those payroll and rent utilities if you want it forgiven. No matter when you use the money, even if you use it after the 8 weeks, you still have to, you are certifying on the application that you will only use the money for those proceeds. You can't use it on other things. But yes, to the question, if you use it after that 8-week period on payroll, rent, utilities, and mortgage interest, you're free to do that. It just wouldn't be considered for forgiveness. So you would still have a portion of your loan remaining after whatever was forgiven based on your eligible proceeds.
Does the clock start ticking when the money hits your account or when you apply for the loan or when the loan is approved?
It's when you close the loan.
Yeah.
And we're probably using that term a little bit differently, is that's typically how, so you might as well call it when the money hits the account, because that's going to be the same days that you're going to close the loan.
Okay. So that's when your 8 weeks starts.
Mm-hmm. Yes.
Okay. This says, I heard Micah mention that the PPP forgiveness is not taxable. Did he mention if the $10,000 EIDL grant is taxable?
I didn't mention that, and I have not seen that specifically addressed. I would almost have to guess it will not be taxable. But I've not seen anything official on that, but and Scott, maybe you would know more, but I would not guess that would be taxable.
I would agree. I don't believe it's taxable, but again, I haven't seen anything official.
This says, I did an application for EIDL on the SBA website. I'm self-employed. Is there more I need to do, or do I just wait for an answer from the SBA, or should I have contacted the bank first?
I don't think you did anything wrong by going out and filling that out. If you still have a need for payroll for the interim, that is definitely something that we can look into. Also, if you have a need for the interim that could be refinanced, there is a program called the EBL, which is the Express Bridge Loan. That program's been out with SBA for quite some time, probably since 2017. That is a loan that can be facilitated by any SBA Express lender. It is an Express loan. Is underwritten the same as a normal Express loan as well. Goes up to $25,000. But what it's for is to bridge that gap between when you receive your funds with the disaster loan, the EIDL program, when you apply and when you receive your funds. Once you receive your funds, most banks are going to work with you, and those funds are to pay off that $25,000 loan, that EBL loan. So.
And that's like typical SBA loan where you
that one's more typical of the SBA. Yes, it's more typical of the normal SBA underwriting. Still not a lot of underwriting, but still just a little bit more than these.
Okay. Oh my goodness. Okay. Oh, there's my son. Okay, doke.
At least you're working.
Life, guys. This is life in the time of COVID right here. Is there a time frame on how long we have to use the EIDL loan?
No, I don't believe so.
Okay. I'm a sole proprietor who has been closed since March 18th. Can I use PPP to pay myself for the months that I was closed and not making money?
PPP goes all the way back. What they're looking for is employment date. February 15th of 2020 is the date. And I do believe, Micah, you can correct me if I'm wrong, but they could get, I don't know if that payroll would be forgiven if it's got to be in between that window or if it goes back to February 15th, 2020. Can you?
I'm thinking it has to be going forward.
Okay.
I don't know, you could repay yourself, but you could pay yourself for the next 8 weeks.
Correct.
So if that has been stated where you can basically go back and kind of reimburse yourself for lost wages, I've not seen that at all. And maybe it's different with a proprietor, but I think in a typical business situation, you're paying for wages, for that next 8 weeks after you get the loan.
And I think that would be a suggestion as far as that person, that they could go get an EIDL loan as well as do the payroll protection program to maybe the EIDL loan to help cover those lost wages.
Can you prepay an EIDL without penalty?
Yes.
And then a final question I see here, can you apply for the EIDL loan but not actually take the funds? So you're just applying so the funding would be faster if you need it.
Yes.
Yes. There's no obligation on really either program if you were approved for a PPP loan or an EIDL loan, there's no obligation to take it. And especially with an EIDL loan, the biggest question we get on those is what's the turnaround time? And because those are direct with SBA, we really don't know, and we can't control that at all. It will be longer than it is with a PPP loan because, SBA is getting applications from across the country. So by the time you apply, and then maybe you apply for a disaster loan, in the meantime, the PPP program has come out, you got your money there, and that's all you needed. When the SBA contacts you on the disaster loan, you could then decide whether you wanted the money or not.
So if you have applied for you've gotten a $10,000, if you get the $10,000 EIDL loan and PPP, but you choose not to use the EIDL loan, what happens to the $10,000? Do you guys know?
I think that's kind of what we talked about a little bit earlier. I don't know if I'm not exactly for sure if you have a PPP loan on there, if they somehow net that out, or if they just say no repayment on that. That's yet to be seen. I don't know. Micah, do you know much more on that?
No, I don't. One thing that I think I've gotten a question or two of people say, well, I'm not really interested in the disaster loan, but I'm really interested in that free $10,000. And, we all are, but I'm not sure. So what I've seen explicitly is with the $10,000 you apply, and the idea there is they're going to give you $10,000 within 3 days to kind of bridge you from the time you apply to when they make their decision and fund you. And they know that may take a little while, and they know that people need money right away. And I think that was the intent of it. What could happen is I know the biggest piece of that is if you are declined for a disaster loan, you get to keep the $10,000. So the other question is, well, what if I get approved for this disaster loan, but I choose not to take it? What happens to that $10,000? And I don't know the answer to that question. The moral and ethical piece of me would say, well, maybe we don't want to go there, but legally or from the SBA standpoint, I'm not really sure how they're going to treat that. Otherwise, you're going to get a lot of people apply for a disaster loan, get the $10,000, and then later on say, no, I'm good now. So that kind of creates a little bit of a challenge there. But like with anything, and the other thing I will say is people have to certify, and for most people, this is not a problem. You have to, if you're interested in a PPP loan, go out and read through the application. It's 2 pages. It's very straightforward, or as straightforward as an SBA application can be. But you have to certify to several things, like Scott mentioned earlier. And the first thing you have to certify to is that current economic conditions, or the uncertainty created by current economic conditions, make it necessary for you to have these funds. And so, and there's other certifications you have to make, mostly that you're being truthful and honest and you're providing accurate information. but make sure you read through those before you certify them. The last thing, obviously, that anyone wants to do or should want to do is not tell the truth to the government agency.
One question that came in that I forgot to get to that had already come in before this started was, do you have to be in business at least a year to be eligible?
February 15th is the date of when you don't have to be in business a year, but you have to be in business as of February 15th of 2020.
Okay. So you would basically just have 1 month of payroll records
Right.
to show. So just, there was a clarifying question. The forgiveness date is June 30th, even if you close on your loan in late May. So you have to use the full amount in a shorter amount of time, or would you just not recommend applying after May 1st?
You're going to have to, I mean, you would have to use that full amount, or again, you know, that full amount at that point is going to be larger than what you would actually have repaid. So in that instance, what we would hope is that SBA comes in and forgives that portion of it, but then there's still some funds left over, and that those funds be applied back towards it. I don't know, in a perfect world, that might not be it. And if the borrower wants to repay that over a period of 18 months, so be it. But that would be in a perfect world.
Okay. And then there was a question that if you get the $10,000, it's taken off the PPP loan, and we don't know that, right? That's just
we don't. That's all.
Okay.
It'd be reasonable to assume.
And this says, is it true you have to pay off the PPP loan before applying for the EIDL loan? No, right? You can do both.
Right.
Yeah. Okay. All right, guys, is there anything we haven't covered that you know people have asked you or that you would want to make sure everyone knows right now?
You know, I think the biggest thing for all the borrowers out there is that as you're going through this process, obviously, one, stay in contact with your lender. If you are looking into applying for a PPP loan, time is of the essence. And I think it's very important that you talk to your lender about their capabilities with SBA's system. Because currently what it seems to be is that is probably one of the slowest processes, as SBA's system is a web-based system and is not used to nationwide activity. So trying to go through and get your process, get the lender approved to submit these deals, that could just take that much more time. So definitely time is of the essence, and be in communication with your lender as far as, hey, have you done some of these? That way they have an idea about how long that could take. I just wouldn't want them to have an application out there and not get approved because they were waiting on the lender to get something pushed through.
And I'll follow up on that a little bit. You know, there was concern initially. The Treasury Secretary came out a week or so ago, maybe a little less, and said that the money would be gone in days and not weeks. And I think the fear was that a lot of the larger banks and maybe some non-banks that are lenders through this program would come in and use up all the money. That does not appear to be, as Scott mentioned earlier, they'd approved about $38 billion in loans, which, like you said, Logan, is a lot of money, but there's $350 billion allocated. So although we don't think the money will be used, the other piece is there are a lot of banks that were not able to get onto SBA's system from Friday through yesterday. And so the SBA has been working 24/7 to get lenders access to the website to get operational. But many of them, there are some here even in town that have not loaded or approved one loan as of this morning at least. And so that will start as those banks get on there and start approving those, and as some of the larger banks now start to get on there, you know, if JP Morgan and Wells of the world start getting on there, that's going to use that money up very quickly. And so we're in a very good position right now where there's still a lot of money left, and we expect it to last for a while, but it could be used quickly. And like Scott mentioned, you know, the SBA website may have trouble, or a particular lender may have trouble. So you need, if you're going to apply, and by this point, most people know if they want to apply or not, you need to get it done quickly. And like Scott said, talk to your bank and make sure you have a comfort level that your loan is going to be approved. But as with anything, you know, don't wait.
And this Friday is for sole proprietors and independent contractors. So they have time still to get their information together and have it ready. It opens at 12:01. Is that right? And that's how it worked last Friday. So you guys were working through the night to get those entered?
Yeah, we were. And so I think Scott entered our first one. The website actually, as you might not surprise you, took a little while longer than, I think we put our first one in about 1:45 and approved it, at that point. But I would imagine this Friday, it will probably be a little smoother and should open at midnight. They've had a week now to work out a lot of the kinks, and the demand on the sole proprietor, independent contractor side will be smaller. There are just fewer of them, or fewer that will apply, I think. So I think we'll see the demand less than we did this past week.
Well, I know you guys have been working around the clock all weekend, trying to help out all your business partners, and we certainly appreciate that. And thank you, Micah and Scott, for your expertise today and your insight. You guys have been wonderful in answering all the questions and helping us kind of dig through the what's what. This has all happened so quickly, and there's just such a need for the information and access to it. So thank you so much, and thank you to all our audience members for attending our webinar today. I hope you guys found it valuable. And if you enjoyed the webinar, I hope you consider subscribing to Biz 417 or signing up for our free BizBreak newsletter at biz417.com. Please join me again in thanking Micah and Scott. Hope you guys have a great rest of your day. Thank you.
Thank you, Logan. Appreciate it.
Thank you, Logan.